Hey guys, back with another daily update video today. It is Wednesday, June 17th. The market's closed at 5:42 p.m. Eastern time. And just taking a look at the big board here, looks like it was a pretty much sideways day in the market. You know, mixture of red and green on the board. But if you look at the percentages, not a lot of big movers today, right? Even the big tech stocks were only up or down like less than 0.5%. Looking at the semiconductor sector, you know, my two stocks, my favorite stocks, AMD was only up 0.17%. Micron was down 0.12%. So again, pretty much sideways days. And just looking at the board here, there's some sectors that are getting hit harder than others. I mean, look at the energy sector. Pretty much every stock is red. Oil and gas, red. Aerospace and defense, mostly red. You know, the bank sector is red. Financials are red. And this is what I've kind of always expected to happen because, you know, I know a lot of people are making plays on JP Morgan and Bank of America and such, but I've always stayed away from the banking stocks because to me it just doesn't make sense because, you know, people are losing their jobs right now. They're unemployed. Maybe they won't be able to make their mortgage payments. Maybe they won't be able to repay their loans. So they're going to end up defaulting or declaring bankruptcy, which means that the banks are not going to get their money. So I feel like in the long term, or at least in the short to midterm, the banks are going to suffer because they're not going to get their money that they would have been getting before the pandemic. So I've been staying away from the bank stocks because I don't want to get assigned shares and then end up bag holding if these things start dipping hard. But they've almost kind of been hyped up because I see a lot of people talking about Bank of America and such and JP Morgan, but you know, I think it's too risky because like I said, I don't want to get assigned shares because I don't have a good, you know, outlook on the banks right now. And, you know, disclaimer, I'm not any sort of financial expert. I'm not in the banking industry, so I don't know. I'm just kind of using what I think is common sense that the banks are not going to be doing well. And then, you know, likewise, in my opinion, I think real estate is going to be the same thing because similar to like '08, if people are not working and they can't make money because they don't have jobs, then how are they going to pay their mortgages, right? So they're going to end up losing their homes, right? And so also, like, people are not going to be buying new homes, or, you know, if they have a new house or they were thinking about moving into a bigger house or something, they're not going to do that right now if their income is strapped. So I also think the real estate sector is not going to be doing so well lately, but we'll have to see. That's just my personal opinion, obviously not financial advice. But let's just take a quick look at my favorite stock, AMD, see what it did today. So AMD kind of traded sideways today, didn't really do much. If we take a look at AMD on Robinhood, we can see that, you know, it opened up in the green, but not by much, by 0.6%. It spiked up within the first 15 minutes to like 55.78. And then over the next like 20-30 minutes, it came right back down, even below where it opened. And then it just slowly bled off all day long. I mean, we did end up in the green, but as you saw on the big board, not by much. I mean, we were up like 0.2%. So I currently don't have any positions open up AMD. If you watched my earlier videos from this week, you knew that I had 200 shares of AMD, which I sold off earlier in the week for about $150 in profit. So that in and of itself was already a good return on my investment for this week, in my opinion. And I did not open up any positions on AMD. So the premiums, if I wanted to be extra safe and just get a 0.4 return on my risk, I would have to get in at a $52 strike price. And a $2 buffer right now just wasn't enough for me because AMD can move a couple bucks in a day. And in a week where I'm trying to be as much cash as possible, I didn't want to get assigned shares on Friday, even though it would be AMD. I would like to get assigned at like $50 or less. So, but the premiums today just weren't that great. So I did not make any plays on AMD this week. My only open position or open play right now is on Micron. And if you remember from my prior videos, I actually own 100 shares of Micron right now at $49.50 because I got assigned a put last Friday. So my strategy right now is just to hold the shares because Micron actually has been trading sideways for the most part all week so far. So I am in the green right now. I mean, Micron right now actually closed the day at like $50.96. So $50.96 minus my cost basis of $49.50. I mean, it's not much, but I am up about $1.46 times 100 shares. So I'm actually up about $146 in unrealized gains. And I say unrealized because, I'm still holding the shares. I haven't sold out yet. And my game plan right now is I was kind of hoping that either today or maybe tomorrow or Friday, Micron would rally hard and go to like mid 50s, and then I'll just certainly cast out my shares and just collect a couple $100 in profit. But my other strategy that I'm kind of toying around with right now is like end of day Friday or maybe midday Friday, selling an at the money covered call on Micron. And what I mean by that is, let's just say, for example, Micron is exactly $51 at 3 p.m. on Friday. And I want my shares to get called away. So what I could do is, if I just sold the shares off outright, I would collect roughly $150. Actually, I would collect exactly. And this is the chart I'm talking about. And what it's showing is the number of reported cases of coronavirus in Beijing right now. So if you look at the bottom graph, what this is the number of cases that are reported in Beijing back from the beginning of this year, like January 24th. So you can see like the number of cases are obviously peaking, right? Then they got it under control. They peaked again like mid-March, got that under control. And since like mid-April up until June 12th, there were very few cases of coronavirus, or at least the daily change was very minimal. And then all of a sudden recently, there's a big spike up again in Beijing. And actually I saw an article that they're shutting down all the schools in Beijing again because of this coronavirus resurgence. So, in my opinion, the United States, this coronavirus situation was going on in China long before we kind of, took it seriously here in the States. And so the market was kind of chugging along until like it realized, something bad is happening, and it really tanked. It really took a big downturn very quickly because I think we were slow to react, in my opinion, as a country. So I think, right now, again, we're seeing cases spike in China, but as far as I can tell based on the media, we're not really concerned again. So my fear is that history is going to repeat itself, and maybe, in a few weeks or something, or who knows, maybe in a few days, the US is going to wise up again, and maybe we'll have another second wave in the US, and maybe the market will crash again. Maybe that's what's going to cause the market to dip to lower lows. I don't know. But that's why I'm trying to be extra safe in these coming weeks and to be as much cash as possible, because I don't want to get caught bag holding. Because if you saw the previous dip earlier this year, when the market crashed, every stock crashed. It didn't matter if you had Disney or some of these stable companies like Coca-Cola or Visa or whatever, everything crashed. So if you were holding shares, you 100% were bag holding. Thankfully, things have almost come back up to where they were pre-pandemic, but that doesn't mean that they can't tank again. And I think the one thing I would do differently personally is I did not invest in any stocks in terms of my long-term portfolio when we were crashing, because I thought we still were going to go down even further. So I was kind of waiting more for a bottom. But, I kind of missed out, because if I did buy shares or stocks as we were going down and rode the wave back up, I would have made, good money. And I know people have done that. I mean, take a look at Disney, right? Disney is a great company. They have ESPN, they have Disney Plus. They now own 7% of DraftKings, which is kind of a sports gambling company. But if you look all the way at its like short-term bottom, Disney was trading at $80 a share. Right now, it's already back up. It was up to like 120 or higher. So just in a couple months, if you had bought around the bottom, you would have made about $40 of profit per share, which is crazy. I mean, it's so that in a couple months to have that return, it's crazy in the stock market. So I'm looking to, if we start dipping hard again, I'll probably slowly start buying into shares of companies like blue chip companies that have been around for a while that I like. Things like Coca-Cola or Microsoft, Disney, these big players that are not going to go anywhere or go bankrupt, like Facebook and Amazon and Google and stuff. Now with Robinhood, you can invest in fractional shares. So even if Google is like $2,000 a share, you can buy $100 worth of Google stock and contain and own a fraction of a share. So you can still invest in the big companies without having a whole lot of money. But I think that's where something I would do differently if we do have another big downturn is basically dollar cost average on the way down. And this would be in my like long-term portfolio, so ETFs and things like that, and not the side where I trade options on. Because with the options side of my trading, I like to get in and out and just make kind of quick weekly profit as kind of a supplemental income or a side hustle or side money. But yeah, I mean, that's something interesting to note. So if we go back and look at this graph, I mean, here's the cumulative total of cases in China, or in Beijing, I should say. So obviously it was going up and up and up. Then for a few months recently, it just plateaued, right? There were not that many new cases. But then again, we have this uptick. So I'm kind of concerned that, you know, we might get another second wave in the United States. And if that happens, and if we're talking about lockdowns again and shutting the economy down again, well, you know, people might panic again and we might have another big dip in the market. So if that's the case, then that's a good opportunity for like stocks that are on sale, basically, that you want to hold long term and to, you know, over the next few months and years and decades to ride them back up to all-time new highs. At least that's what my strategy is going to be, I believe. But if we want to take a quick look at bar chart just to see what the most popular options that were traded today were, it looks like, again, a lot of calls. So people are pretty bullish on the market right now. People are buying and selling a lot of calls. So Snap was really popular. So I wonder if some news came out about Snapchat. Apple was popular. Microsoft, Apple again. You know, AMD, man. I'll tell you, these 55 and 56 calls, they're very popular. They've been popular all week. Let's see, is there any Micron up here? So these are all stocks. Let's look at ETFs. See if IWM is up there. So loading. All right, so SPY is, you know, the most liquid option out there. So SPY is always going to be their top. XLF, I believe XLF is a financial sector ETF. Yeah, so that's interesting. People, it looks like they're bullish on the financials because they're buying calls at the 28 strike. Here's IWM. Oh, actually, people are buying puts at the 140. So that's interesting. So people are a little bit bearish on IWM. But here's a 150 call. That's actually pretty aggressive because 619, that is this Friday. So there are people that are buying calls thinking that IWM is going to go to 150 in the next 2 days, which, I mean, makes me feel better because I sold a cash secured put, so that means my puts will be secure. But that's interesting. Here's some more IWM. I mean, IWM is also a very, very liquid option. I mean, look, there's 1, 2, 3, 4, 5, 5 IWM trades or options right there in the most popular ETF category. So anyway, I had an overall good day today. I got into a position at a good strike and collected a good amount of premium. Let me know how your week is going. Did you open up or did you close any positions this week? Let me know what your strategy is for Thursday and Friday. As always, if you have any questions or comments, leave them below. And happy trading.